fourth episode of Alpha Unchained, where we unpack how blockchain is reshaping capital markets. But before we get started, Todd, I have to read a short disclaimer. The views expressed in this space is that of the individual presenters and does not necessarily reflect the views of Alphaledger or R3. Nothing discussed in this space should be considered an investment advice. So now that that's out of the way, let's talk about Solana and how it's transforming the capital markets. Obviously, I'm super excited, Todd, to have you on this X Spaces. You are the co-founder of R3 and really an OG in the enterprise blockchain development and implementation. To those that are joining in now, here is a fun fact, Todd. I think you remember where this is going back to 2016, 2017, I suppose.
Yeah.
That you were one of the first ones to hear about me leaving PIMCO, thinking about starting Alphaledger and what potentially a capital markets could look like on blockchain. So this is like a full circle, right? It's amazing that our conversation that took place in 2016, 2017 really was the foundational conversation, which allowed me to sort of leave my old job, think about the world very differently, and leave and start Alphaledger. And if you think about that conversation, what really hasn't happened is that capital markets haven't really changed much, right? They've become bigger, obviously. They have moved towards T+1 settlement. It's still a clunky process. My compliance person still has to call DTCC to confirm the trade has settled. And anyone that's not in New York is effectively bound by short trading window, just so that we can run batch cycle, which is mark-to-market securities, just in time to stamp the books. And now we have this technology and this opportunity, and importantly, really, over the last 6-7 months, a regulator that's engaged in listing. So now we can imagine real-time trades, atomic settlements, costs that are extremely low, and potentially a promise of on-chain capital markets with sub-second finality. So welcome to the spaces, Todd.
Thank you. Well, so going back to when we met, Manish, so if you remember, I was there to give a talk to
PIMCO, yeah,
a large group at PIMCO, and I felt like I was an alien landing on Earth, trying to describe what I know. It was a lot of blank stares, and I had one person that was listening intently, and that was you.
Yeah.
But it's sort of indicative of what the challenge was back then, and it still is the challenge today. So there's a lot of work to be done, but I have increasing conviction that all investors are going to become on-chain investors. It's going to happen. We just got to figure out how long it's going to take.
Yeah. Look, I mean, I remember that clear as a daylight when the thought was a Sybase replication server could do what a blockchain is potentially can do, right? That was sort of like the view in the room at that point, and I could see those eyes gloss over. But here we are, right? I mean, you now have one of the largest asset managers in the world on blockchain. You have Apollo, you have R3 bringing on banks. I mean, look, you've seen the evolution of space from ground zero effectively. So maybe let's just start with you talking about, your background, origins of R3, and the promise that you thought blockchain would bring. I mean, this is early 2016, 2017. So just talk about that and maybe bring the concept why permission chain was such an important concept back in 2016, 2017, because a lot of the folks today in this space don't think of that. Don't think of capital markets requiring permissions and compliance and the whole 9 yards. So just talk about origins and talk about the evolution of R3 from there.
Yeah, so we started this kicking around the idea, started talking to banks 2014. So very, very early. I had previously spent about 15 years in financial markets, FX trading, emerging markets, that kind of stuff. So I had seen what technology can do to a market. When I started on the trading desk, I don't know, there was say 15, 16 spot traders on the desk. By the time I left the industry, It usually was one person. The joke was there was one man and one dog, and the dog was there to keep the man away from the computer. It was actually making the markets in FX. So that's sort of the direction that I saw going generally. So this is early days of even fintech, not even blockchain. We walked around Wall Street, and every bank was interested and scared. And so we tried to help them understand. Eventually, we were quite lucky to be able to get the attention of a handful of banks, which turned into a lot. So we had at one time, I think, 45 banks, about 80 or 90 institutions around the table, listening to what we had to say about this topic.
Right.
And eventually we rolled that into what became R3, the company itself. And this was, as you mentioned, when we first started to get going, building this 2016, Ethereum mainnet was not live.
Right.
Not alive.
Right.
This was just, the yellow paper had just come out. This was just still a concept, promising one, but still a concept. So half the banks said, okay, maybe we can fix this Ethereum thing to be enterprise grade. The other half the bank said, that's crazy, that'll never work. We need something that's built for our requirements. And so that's where we started and we focused. You got things like enterprise Ethereum and consensus out of the other effort. And in R3, we ended up designing and building Corda with the banks that eventually became our investors. We have 46 investors, 41 are banks. We've had, Wells Fargo, Bank of America, HSBC, and others on our board. So that was our ecosystem, and it still is our ecosystem today. About a year and a half ago, we took a look at where the market was, where the technology developed. I personally probably talked to every L1 and L2 on the front page of CoinMarketCap to understand what they were doing. We realized that the market had evolved so much on technical level, the regulatory level, and I think importantly, the market structure had improved so much, and that really opened our eyes. We looked at what we had done on the enterprise side, and we're really proud of that. We have lots of networks that we've helped get live on Corda, but it has been hard because any change is hard. Any network formation is hard, and in particular, it's hard when you're doing it in the regulated space. So
yeah,
we have a lot of great projects and networks that are live today, but they are each of their own network. There is not really a single mainnet for them to transact through. And we'll talk about it more, but that was one of the reasons why we were excited to begin the conversation with the Solana Foundation and end up in the partnership, and really, really excited about what's next to try and, I think, really, onboard the next $1 trillion of assets to Solana, because it really is what we feel is it's the only architecture that's going to work for that.
Yeah, I mean, it's amazing, right? I mean, because when you guys came and presented at my former employer, the notion that you had some of the largest banks on your cap table that were listening was quite incredible, right? I mean, but with that comes its own challenge. When you sit in the back office and you work with the large banks, I mean, which is what I did 20 years, right? I mean, building the core infrastructure, which is, you sort of lose what the market is doing. You are focused on ensuring that the Excel sheets that are talking to each other don't lose touch. How do you run mark to market? How do you create privacy? I mean, all the bureaucracy that sort of comes with each bank on its and rightfully so, right? I mean, because these guys are running $1 trillion balance sheets. They are somewhat risk averse. They used to be risk takers, and which is one of the reasons why we ourselves started on Hyperledger Fabric, which was a permission environment. But clearly, as the regulations have shifted, are shifting, we are clearly seeing adoption of public blockchain, and public blockchains are becoming really sophisticated. I mean, this. So how do you see the transition unfolding, especially for traditional finance, given that you have large investors, large banks on your cap table? How does it start to unfold on a public blockchain like Solana, given speed is no longer a concern?
Yeah, so what we're focused on is, as I mentioned before, we want to onboard the next $1 trillion of assets and users onto Solana, starting with the networks that are built on Corda, which is our technology, but not ending there. So what do we have to do to make that happen? We got to make it simpler on the implementation side. So that's what we're building and working on, to make these these sort of singular private networks really be part of the Solana ecosystem as opposed to a side chain or an L2 to it. So we're doing some clever things on the tech side there. But we also need to remove the friction on how can you make an off-chain asset an on-chain asset. That's somewhat straightforward today, but we have to bring more assets on chain, because I think what I'm most excited about is like thinking about markets today, on-chain markets today. There's a real market there. There's a real market demand. More on the speculative side, but increasingly there are more on-chain native capital allocators. So what the conversations we've started to have over the last few years is the banks and customers and investors that we speak to, they are very focused on how they can start to enter DeFi markets in the right way. For example, they're not going to do it in one big rush, and so we have to help them along on that journey. But that's a big part of what we're focused on. So how do you bring off-chain assets on chain? And then I think one of the things that's been pretty interesting in the last handful of months is there's two use cases that have come up that we didn't fully expect to see. One is, how can we make crypto collateral more effective into sort of traditional finance? That's one. So the flow the other way. And two is, can we start to build better traditional use cases in things like intraday repo by having an asset that that's settled on a coordinate network versus a payment that happens on Solana through a stable coin that two regulated entities would love to settle in. So those are the types of things that we're working on, plus some other fun stuff that we'll be talking about in a few months.
Yeah, I mean, look, I mean, the whole atomic settlement, the DVP notion sort of starts to wither away, right? I mean, today's world effectively is your delivery versus payment. There is DTCC that's involved in between. But as I think of public blockchains and effectively atomic settlements, those things become history. I mean, you don't really need DVP because you don't trade until the asset is defined and until the capital is available. And the atomic nature of the transaction is what's, to me, is really exciting. Especially as we think about tokenization of the existing public markets, tokenization of the repo markets, settlement is what, to me, really moves the needle forward. And so,
yes.
Go ahead, sorry.
Yeah, and you think you got to keep it in perspective where they're, in the US, they're just starting to work on, say, going 24/5, let alone 24/7 on market.
Yeah.
So there's a lot of wood to chop here.
Yeah, I mean, I think the market narrative today, as we think about it, right? I mean, there is a notion that 24/7 markets are just inherently available to everybody. It's not the case. 24/7 is true for the crypto natives, but it's certainly not true for your traditional assets, just because there is a massive amount of capital that's still in mutual funds. And mutual funds effectively are the whales that require pricing at the end of the day, which does mark to market. So I think that notion is sort of lost today in the large conversation that we're having. If the market moves in wholesale 22.5, 24.5, that's a massive movement. That's trillions of dollars being moved, and effectively liquidity coming right as a result of that. Not just a fractional liquidity that exists today on blockchains because of the notion of 24/7 for securities.
Yeah, it is very exciting, and we gotta but we gotta keep pushing. Gotta keep pushing on that.
Right.
So Manish, you guys made an announcement this week.
Yeah.
tZero.
Yes, tZero.
All right, explain the announcement to me. Explain it like I'm five.
Yeah. Look, I mean, here is what's taking shape. Like, I mean, so let me rewind the clock, right? I mean, so when you and I spoke early days, there were two things that were very clear to me. It was not the question of if tokenization is going to happen. The question really was how and when, right? So when we started, we really worked with the regulators. This was Gensler era, and I've talked about this previously. We came with the notion that we are bringing securities on blockchain. There's no rule that says we can't put them on blockchain. If I can put them on an Excel sheet, I can put them in an Oracle database, the Sybase database, I can damn well put them on a blockchain, so long as we are doing KYC AML. And as a result, we built our broker dealer. in 2020. Then we built our transfer agent, which, by the way, I would like to take a hacksaw on that one, because blockchains effectively are transfer agents. And as we think of the markets, you can't build the whole financial ecosystem on your own, right? That is a reality grounded with facts, because there are trillions of dollars in the marketplace. So now the question is, how do you partner? Who do you partner with? And you have to partner with the right entities that have a environment of regulation, thought process baked towards compliance, accountability, and risk management. And tZero, if you think about it, was early days Overstock.com and was one of the first ones to really see the promise of blockchain. They effectively tokenized their equity. I mean, they started with the notion that this is going to happen, so let's do it. And as we think about the equity market, which is effectively now on the precipice of trading 24/7, even though I don't think it's going to happen overnight, you want all the right foundational elements in place. So our partnership, as we think about with tZero, is foundational and fundamental, given the fact that they have all the regulatory capabilities that they need. We clearly bring a regulatory mindset and a technical breadth to that. So that's where the conversation really started, and where we are now. In fact, I'm making it public. We are going to start to bring real securities that are traded on Solana through the combination of our technology and their regulatory capabilities. So we're starting to put together a broader ecosystem, and it's something that you guys have done, right? I mean, Todd, like you guys were the pioneers. You have had people that have followed you in the permission environment that have tried to do things like that. But it takes commitment and right stepping to kind of build this foundational layer, right? How do you tokenize an asset? That's one thing. How do you allow for liquidity to follow? That's another one. So you do need the traditional market players to come on chain. And I think this is where our partnership begins with tZero.
No, that's cool. Yeah, it's amazing. And I think you're going to see more and more of that, right? I think with folks like tZero that have been in the space for a while, and what you've built and big thing that we're focused on is how can we have the right partnerships in place to make this effectively the assembly line for real world assets on chain,
right?
As simple as possible. But then beyond that, everyone always thinks that if you fractionalize a tokenize something, it creates liquidity, which is not the case. So you got to make sure that there's the right thought put into how do you put the pieces in place to ensure that these assets that are brought on chain have the proper liquidity after primary issuance.
Right,
really, really
right. I mean, the whole interoperability between the traditional market and your new capital market infrastructure that's being built today has to be there. I don't think we can ignore the fact that DeFi is a superior platform, right? So I don't think anybody can question that. I know certainly Wall Street folks will tell you that everything is hunky-dory, and then the DeFi folks will tell you Wall Street sucks. It's not a binary answer. They both have to coexist until such time that the issuance of every asset happens on a public blockchain, right?
Yes.
So there's a real work that has to be done, and it's a work that doesn't occupy a lot of the mind share and space today, but it's one of the most important steps that needs to happen. And so the fact that you guys are taking that broad initiative and moving things over to Solana is fundamental to TradFi coming on to DeFi.
Yeah, and we're excited because we have conviction. I can feel the market pull just in the few months that we've been focused on this. So the conditions are right, and the other thing is it's still early. It's still admittedly small. Like Solana is an incredible playground for RWA, but that hasn't really taken off yet. So that's what we gotta fix. But
yes,
the pieces are in place though. Like capital is there. stablecoin treasuries, on-chain treasuries, the whole DAT thesis has gotten a lot of people's attention, and I think that that will also be a very positive flywheel for real-world assets as well. So we're kind of like trying to take like 80% DeFi, 20% TradFi, and putting the right pieces together.
Right. So I mean, look, I mean, we previous to tZero, we formed a relationship with Simplify Asset Management, which is a $9 billion ETF RIA, and they have some incredible products. They are sub-advisor to our T12 fund that's live now. And so it is natively a Solana fund. It's a private fund, right? I mean, and I believe the returns are going to be phenomenal on that. But the market conditions are obviously changing. So that's why we have these smart people managing our fund. But Todd, from your standpoint, and you sort of touched on this briefly, which is that we have to grow the TVL of RWAs on Solana, right? That's a factual statement. What products is KYC AML such a hindrance for it to grow, or do we think that the mindshare evolves and we need a better killer product that doesn't exist today on Solana, or where do you think this needs to move?
KYC, AML, permissioned assets or collateral. Does it make it harder? Maybe. It's just kind of an excuse, though. I feel because I've heard it for the last 10 years. From TradFi folks, like, well, as soon as the regulation gets more clear, we'll act, we'll do stuff. So on the reg side, listen, we have clarity now.
Right.
I didn't mean to make a pun, but like we have, there is much more clarity. So does it introduce some friction to potentially focus on onboarding RWA in a more permissioned way on chain? Yes. Once it's on chain, though, I think that there are many different ways, and we've already seen some being tried out. Some maybe are a little bit more magical thinking than others, but there are ways to be able to bring permission collateral on chain and have it access permissionless liquidity and composability.
Yeah.
I think we can do that. In particular, because the rules of the Genius Act with stablecoins, and I think as the rules are actually written, because even though the bill was passed, they still have to draft the rules more specifically. That opens up a lot of different ways that you can leverage permission on-chain assets in a more permissionless way. So I don't think that that's a bottleneck. I think the things that you've built, the reg stack that you've built is incredibly important. And we need to see more and more of that. There need to be, I think, more choices in the market around that. So that's great. I'm glad to see what you guys have built. Because it's also very helpful. I think initially I have a very simple thesis, man. Like there's on-chain capital and that capital is kind of lazy and wants to stay on-chain. I think everyone talks about, interoperability, this and that, and, moving things across chains. That's kind of bullshit to me. The capital on these different chains, it kind of stays there unless it's very motivated to leave. So we need to bring more investable assets to where that big capital base is. And that's very much with Solana. And then I think you mentioned as well, like why Solana, like why would we choose this ecosystem over others? We looked a lot at a lot of different EVM ecosystems, a lot of amazing things going on there. Obviously, that's where the bulk of the TVL is across DeFi today. Challenge though, as you go forward, I think you have two challenges. One, the main net focus for Solana is hugely impactful. Simplifies it especially for decision makers on the TradFi side. If you choose EVM, like how do you choose EVM? Is this something that you're working on with Ethereum, with an L2? Are you going to be on a corpo chain that's using EVM? So you're going to trade, you're going to trade what you have today by being locked in by, say, LCH or CME, and all of a sudden you're locked in by Robinhood and Coinbase instead. You got to be pretty conscious of falling into that same trap again. And also just, what's with where Solana is today and what they have on the roadmap technically, it's going to scale to meet the needs we feel. And the one thing that I would say is that, I've worked with incredible engineers that are maybe potentially somewhat conservative in their nature of looking at technology. They're kind of fallen in love with Solana. So they were the hardest judges when we were looking at different ecosystems. of where we could partner. And they're incredibly bullish and very excited about how the network looks today and what the roadmap is going forward. So as far as like scaling to meet the needs, introducing the right permissions and privacy at, say, the token level with what Token 2022 has and some of the things that are being developed around securities on Solana. It's not that it's all fixed today, but I'm pretty comfortable that the roadmap is going to take care of most of the requirements.
Right. I mean, to me, I think you touched on a couple of things, which is the token extensions are critical, right? I mean, so I think the ability to move an asset without sort of showing the dollar amount being moved is obviously critical for large transactions to take place, especially in the block space. But I think the one part of the infrastructure that is lacking on Solana, and I think it's lacking writ large across blockchain, is the wallet infrastructure. So we have incredible wallets, right? So and I'm not going to name any, but and I use 5-6 of them. They are all built with crypto in mind, not with securities in mind. And I think that's where some of the friction lies in terms of the asset being held in a wallet, why they need to be sort of permissioned the way they are permissioned today. And I think over time, if we can improve that capability, you can start to really change how broker dealers, capital markets, issuers start to interact with the new sets of investors that are already on chain. And this is where I think the data point that you bring on, which is there is captive capital on chain, but that captive capital is looking to move that asset at a speed of light between the assets and not have to think about, is this wallet going to hold? What happens if I lose it? I mean, if you lose a security, that's just not acceptable. Period.
Right.
And those compliance frameworks have to change and be accepted.
Right. And also, I had a conversation yesterday with someone at a very, very large TradFi institution. And, their point is exactly what you're saying, where these broker dealers and other ecosystem participants, they can't have trade fails. If there were any sort of wallet that they would be interacting with has to probably in the short term be able to integrate to Broadridge and SunGuard or whatever systems that they're running internally. And those are the things I think maybe that, on the DeFi side is maybe not as appreciated. So it needs to be taken into consideration. But what's going to make it work is, and I think I look back on the last 10 years, man, and we've done a lot of great work, but we've learned a lot of lessons. And when I look back on projects and customer projects, especially that have worked versus ones that haven't, the ones that have worked is generally speaking, the ones that are focused on new business and top line revenue.
Right.
And that's why what we're talking about today is like, how do we bring TradFi, either service providers or issuers, for example, new customers or new distribution. And that's way more motivating than what, potentially we had talked about more in the private permission blockchain world is, hey, we can help you build net new infrastructure that will make you X% more efficient.
Right. So Todd, I mean, if we look at the future, right, and we look at the capital markets on Solana, right, we are both our organizations are on Solana. We are focused on building incredible products and bringing incredible issuers onto the platform. How do you see the next wave of adoption? What are the biggest challenges that you're really seeing today? And frankly, what's the message for TradFi institutions that are still sort of stuck on this pseudo permissionless environment as some of the folks have sort of like taken on?
Yeah, I think in the short term, where we're going to see the adoption is bringing more product to existing on-chain investors and making it fit into a package that they are looking for. TradFi has incredible inventory, especially if you can figure out, differentiated yields. That's somewhere between 6 and 12%.
Yep.
I think that would resonate quite well. I mean, crypto will have bull and bear markets. It's the most sort of reflexive seasonality market in the history of mankind, right? There'll be more booms and busts with the sort of on-chain crypto yields. So we need to increase the diversity of these RWAs we can bring on chain. But I think it really has to be focused on packaging it so that it looks like a DeFi product, and then bring more and more existing investors on chain over time. That's how it's going to, I think, work in the near term. And then once we have that, we're already starting to have conversations with, say, private credit funds that are incredibly excited for looking at Solana as a new distribution mechanism. Sort of actively think of it like an RIA channel for them, but not just for the initial allocations or initial investors, but how can you create different types of markets around the side of it that are perfectly suited for DeFi, around different liquidity pools that will start to positively amplify these markets that are, right now, have tons of room for improvement. So I think that's what's going to be exciting. But there is a ton to do.
So if I look at the future, do I see R3 having its own permissionless token? If I'm looking to speculate, and if you're able to share some fun stuff that you guys are working on, because I know you guys are working on a lot of incredible stuff outside the boring traditional, bringing the traditional finance. Like throw some nuggets, man. Give the audience some insight.
I'll give you a few, and then if you'll have to come to Solana Breakpoint in December to learn more. But we announced we are from now on R3 Labs, so that's a very specific change. We're not R3, we are R3 Labs. We're heads down working on how we can really have Solana native protocol that would make it dead simple to bring assets on chain and have them usable on chain. I'd say that. And what we're focused on, as I said before, is that this needs to be built in a way that is very much DeFi native. And so that's using all the types of product packaging and incentive mechanisms that you'd expect, put it that way.
Amazing. So listen, I've known you for a long time. I really appreciate you sort of coming online and having this conversation. I think the market is headed in the right direction. And anybody that is listening that happens to be from the TradFi world and is focused on the permissioned blockchain, I would suggest calling Todd and better understanding why the next capital markets are going to be on Solana. So with that, Todd, looking forward to continuing our work together. I'm sure we're going to make some incredible announcements over the course of the next couple of months. But thank you for coming, and look forward to the next steps.
Thanks, Manish, and for everyone else, I'll meet you on chain. Take care.
Awesome, amazing. See you.